everybody, Doug Smaldino here. It's a great day today. It's Friday. I'm feeling good. Going to be going up to San Francisco next week, so I'm pretty jazzed about it. What a great day to learn about some mortgage basics for my real estate agent friends. Look, I'm not trying to make anyone a loan officer here, but I want to give you some basic stuff. This is the first video in a 4-part series about just giving you guys a little bit of education so you can know if you are working with a credit-worthy borrower, someone that can get a loan or not. So let me just walk you through a couple things. It's really only 3 things. It's credit, it's income, and it's assets. That's it. Everything else is just part of one of those 3. So let's get started. This first one's credit. No, everyone's got a lot of questions on credit. So let's start with this and then see where we end up here. Of course, anytime you have questions, just reach out to me. I'm always happy to help. Us or our team, always email newclient@hillhurstmortgage.com, and a team member will get back to you. So, real quick here, thinking about this, and we work with a lot of, experienced agents, a lot of newer agents, but this is a good refresher course and just great for newer agents. But, the first question you're probably wondering is like, why do I care? I'm not the lender. I'm not going to do the loan. Well, the first thing is, we don't want you to waste your time. We want you to be out there working with good, solid people that are serious, that can qualify. And there's nothing wrong with you asking a couple questions if you get a new lead, whether it's an online lead or something, and find out what kind of person this is. So you don't have to waste your time. Secondly, I call this the ARL level, the advisor receptiveness level. Basically, if they're willing to talk to you and listen to you and appreciate you, this will be a little barometer for you to determine how serious they are and whether or not they qualify, or if they're trying to hide something. Maybe they have a 500 credit score. Who knows? And of course, it's going to expand the agent's knowledge and make you guys a more trusted advisor. So with the credit, here's just a couple things. Again, I'm not going to go too deep in this. This is really just general information. Credit is very important when it comes to obtaining a loan. We talk about the credit score, the FICO score, or the Empirica score, or the Beacon score. The FICO's the name everyone uses, but there's 3. There's Equifax, TransUnion, and Experian. Those are your 3 credit bureaus. The FICO score is the Experian code name for their credit scoring model. And the Empirica score is TransUnion's name, and Beacon is Equifax. All the same thing, just packaged with a different label on it. So it's good. It's not everything. Good credit score. Usually, when you hit 740, 760, you're at the top end of the food chain. It doesn't matter if it goes any higher than that. So it's just a number. It's a mathematical formula. Again, it can be manipulated, especially if you work with a great loan team like Hillhurst Mortgage. But, just one other thing is, so, a lot of these newer millennial, I'm noticing a lot of these millennial buyers, they don't have much credit. They might have like a student loan or 1 credit card. Just so you know, generally the lenders want to see, the general rule is 3 trade lines open for a minimum of 2 years. Now, what's a trade line? A trade line could be, like I say here, a credit card, a car payment, a mortgage payment, a student loan payment, something, there's revolving and installment debt. We'll talk about that briefly, but basically, they want to see that someone's had a credit history. Now, if you get into FHA loans, they also can look at non-traditional credit, i.e. stuff like rent that doesn't get reported to the credit bureaus. But for the most part, when you talk to people, you want to ask them, hey, do you have credit? Have you had a Macy's card, a Target card, a gas card, you name it. That's a trade line. And but just be aware of that, especially with the younger buyers. And also beware of, I guess it's kind of a good thing when they say they subscribe to like Credit Karma or some of these online services. It means they kind of care about their credit, but don't be the numbers aren't that reliable. When we pull them fresh, raw, right from the bureau. Credit Karma, it's like their own scoring thing. They're usually close, but just not reliable. So just keep that in mind. And they'll still, when you send them over to us to get pre-approved or pre-qualified, we're going to run a credit report, and we're not going to go based on what Credit Karma says. So just a heads up with that. Here's some things that can help. If they ask you, hey, what can help my credit score? Well, no, don't make late payments. Don't let there be any liens, judgments, or collection accounts. And keep here's the key, the last one here, or rather the next to last one, low outstanding debt to available credit. And we'll have an example in the next slide. Having credit with low or no balances is good. Don't close credit and don't pay collection accounts. If you have like a medical collection for $20 or $100, they're better off calling the collection company, negotiating a settlement. Believe me, these collection companies are all a bunch of thugs. They just want the money. And tell you, no matter what they say, the worst thing you can do is have a paid collection account. That means basically, yeah, I didn't make the payment, I admit it. At least with an open collection account, we don't really know. So just keep that in mind. If borrowers asking, always send them over to us. We're happy to counsel them on credit matters too. Now, items that can hurt a borrower's credit score include, poor credit history with late payments, obviously, liens, judgments, collection accounts, high outstanding debt to available debt, multiple revolving accounts with high percentage of outstanding to available credit. Here's an example. I want you to see this here. This is really cool. Basically, you've got Visa credit card, total credit line $15,000 with $12,000 outstanding. Now that's 80%. The 12,000 is 80% of the 15. That's not good. You want to keep that at 50% or less. Always keep the outstanding credit below 50% of the available. For example, it would be advised to keep the total below 7,500, which is half of the 15,000. But then the next thing you're probably thinking, because you're all smart, is, well, if you simply increase the credit line, call the credit company and say, hey, move my credit line up to 30,000, then the 12,000 is less than 50%. So that will have a positive impact on the credit score. Look, guys, this stuff is just super basic stuff. Just want to get your feet wet, give you a little bit of information on credit stuff. Please reach out anytime. Always happy to help. You guys stay safe out there. Make it a great day.